President Trump signaling that he might provide exemptions on certain countries when reciprocal tariffs go into effect on April 2nd. So what can sometimes get lost in the shuffle is just how American companies feel about current and impending tariffs. Joining us right now with one perspective is Scott Paul. He's with the Alliance for American Manufacturing, where he is the president. His organization supports President Trump's 20% tariffs on China, as well as what it calls trade rebalancing. And first of all, Scott, thank you for being with us today. I would assume that because you represent American manufacturers, you'd be in favor of just about every tariff you see. The more, the better, because it would certainly help your constituents when it comes to competition.
Well, thanks for having me on, Becky. And yeah, tariffs are part of the economic policy solution. Not every tariff. I mean, there's an optimal tariff rate. And I think, in my point of view, the better tariffs are the ones that help to rebalance, that help to level the playing field, that provide reciprocity, and that also defend American industries that are particularly vulnerable, those that we need for national security purposes, those that the Chinese government has targeted through a series of 5-year plans. And so, yeah, we're anxiously awaiting what happens on the reciprocity, also the sectoral tariffs that President Trump has talked about with respect to pharmaceuticals, automobiles, and other key sectors of the economy.
What do you think's happened, let's say, over the last 40 or 50 years in this country, just in terms of manufacturing, how much more complicated, much more difficult it's gotten to manufacture in the United States, I guess especially post-NAFTA?
Yeah, well, I mean, look, we could talk for a long time about it, but I'll try to crystallize it very quickly, is that we saw all sorts of incentives to offshore, basically, and we didn't think there would be any consequences as we shifted to a high-tech or service economy. We've seen repeatedly what the consequences of that are. We can't get access to semiconductor chips, or we know that the Chinese government has control over a large percentage of key manufacturing processes, or even if we wanted to, we couldn't scale up a machine tool industry in the United States right now because so much of it has been offshored. So in a lot of ways, this is an emergency. And, you know, COVID or supply chain disruptions, they're not one-offs. I mean, these are continuously going to happen. And I think our understanding of where Beijing is headed on a lot of this should also raise alarm bells. And so there's no doubt that there'll be some adjustment, that firms will need to look at making different sourcing decisions. But this is something that has been brewing, Becky, for 20 years. And we're starting to see a reversal of that. That's not always easy medicine, but it's something that we should do now because it doesn't get any easier as we punt it down the road.
There was a new Deutsche Bank survey yesterday that interviewed hundreds of respondents, and I think these were economists they were talking to, but they now say the probability of a downturn in growth over the next 12 months is about 43%, so getting closer to 50%. UCLA Anderson, for the first time ever, issued a recession watch, and they did this entirely because of the president's tariff potential policies. What would be going too far, in your estimation? What would risk bringing a recession or a downturn that would maybe outweigh the benefits that you see for American manufacturers here?
Yeah, Becky, it's a good question, and part of this is untested because we haven't done this to the scale that we've seen for a very long time in this economy. I do think that across-the-board tariffs that would be substantial without any exclusions would be riskier. I think the more targeted they are, the better, looking at key sectors that we need to preserve in the United States to send those signals very clearly so that you can attract some foreign direct investment into our economy. And I also think that the more notice that firms have in terms of reshoring and making alternate plans for supplying, the less consumer impact we see from this. So there are mechanisms available, and I think a lot in the business community is also looking at the rest of the Trump agenda with respect to deregulation or taxes and energy, and thinking that betting on America is a pretty good thing. Let's remember that for the last 5 or 6 years at least, we've outperformed almost every other economy in the world. So we've been really carrying the weight here. So it does stand to reason that the stakes are a little higher.